Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar. Dollar, dollar. Ching, ching, bling, bling. Got the chatter. You ain't talking money.
What's good, everybody? It's your boy, Reckless Ray De Niro, and this is the first episode of not crypto portfolio updates, just portfolio updates. Why are we doing just portfolio updates? Because we finally have enough money in a portfolio in my brokerage account now that I'm focused on it. Once we broke that $100 threshold, I started paying attention to start having a conversation and show some of the ideologies on how I'm building out my brokerage accounts. So in this introductory episode, we're going to go over what the starting balance is. Well, actually, they're not really starting balances because this has been a work in progress because I've been just flooding money in there and using all of our future financial strategies. If you're not tapped in with us on our playlist for future financial strategies, all of these things are encapsulated within my YouTube. I'm actually in the process of cleaning that up, so it should become a little bit easier to find moving forward. But we're using that. We're bulking it up as fast as we possibly can. We have some intents, and what we're going to do is we're going to go over my methodology, my ideology on how I am looking at building this portfolio out at this point and why. So let's jump right into it. I mean, let's go ahead and go. So we're starting off on this inaugural episode. We have a total brokerage value of $19,340.85. That's what we're starting out with, what we've built up so far. One of the first things I want to note, obviously, this was pretty stagnant. Like there's a little bit of money in here. Up until about February was when I started actively jumping money in to the market. And how did we do that? We went and looked at the, what do we do? We did our first debt conversion, the debt conversion test. When we pulled out, I think it was it like 5 or actually it might have been 10. I'm pretty sure it was $10,000. And we pulled that out of our Discover card and we converted that into cash in our bank account. And then we moved that cash. We did not use it to consolidate debt. We did not use it to pay for a trip. We did not use it for a down payment on a new automobile. We used it to buy assets as we were building out that opportunity fund. Actually, it wasn't $10,000. It was $5,000. The goal was $10,000. And I took the cash advance of $5,000, if I'm not mistaken. And we use that for the debt conversion, which no, it was 10. It was 10. No, it wasn't. It was 5. It was 5. Thinking back, it was 5. We flooded the other half of that in working overtime, grueling ourselves to the bone. But that was the nest egg. We were looking at potentially working on a new house, putting some money down for that, or also potentially getting into a position to where we could do some upgrades around the house. Fast forward, I ran into a grievous injury, so I'm not going to be able to work as much, obviously, so that's going to change things, considering that there's going to be either some pay discrepancies, or I'm going to have to take a different job, or I'm going to be doing it, or I'm going to be laid off temporarily, whatever the results of that are. The game plan now is to protect the portfolio. Fortunately, we had the opportunity fund, so the surgery and all the medical bills that were involved in that are taken care of, which is a blessing in and of itself. A lot of people don't have $1,000 set aside in their bank accounts should an emergency happen. Now, granted, in my 4 decades of existing, I have not experienced very many emergencies. This would be the first legit one. And, having that cushion and having all that excess capital obviously invested, but accessible if needed, is definitely something that I can't put the level of you can't really put a value on that until you experience it. And having those emergency funds, and while I don't save in cash, I don't believe in cash savings. I think, especially in the current environment, it is ridiculous. I do believe in having funds on hand that you have readily available. And the reason for that is you want to be able to handle an emergency should an emergency present itself. Now, we have plenty of credit. We have good credit. So front running that is not an issue, which covers the majority of the emergencies. But being able to have that cash on hand is also, to be able to convert and get to it, is also wonderful. So what we're looking at here is I'll show how I've set up my brokerage account. I had to do some strategic looking because I'm not one of these guys who I follow my strategy that I advocate for on these shows. Like, I'm not going to have a million positions just to have content to talk about. I'm actually building out this portfolio. So this isn't about the content. It's more or less about me documenting the journey and explaining my ideology, and then we'll get to see if it works real time, which is how I've done all the other shows that I do on this channel. With that said, let's break down how we got here. So the first thing that is, why are you, a crypto guy, worried about your brokerage account? First and foremost, I really wasn't until I got over $100 in dividends. Then it actually started to matter with me. Secondly, I don't. So I'm a crypto guy. My crypto portfolio is going to destroy anything that I build in the traditional finance space. So the next question is, why do you do it? Well, good question. This is a hedge. That's what this is. So the amount that's in here pales in comparison to my crypto holdings. I'm trying to get this to a certain point so that, just like my crypto holdings, it will be self-sufficient and kind of set and forget. So we are steamrolling to get our core positions acquired. And the way we're doing that is we're utilizing all the tools. Most of the investment capital is going into this. Most of the future financial strategies we're using, such as debt conversion, is going into this. And the reason being is it generates income, and we can use the income to pay back the debt during the debt window. And what that is there's a certain amount of time that you get 0% interest, which is like free money. You get the stuff at 4.5%, and all the stuff that we're setting up off of those funds, we take a chunk of that. I do have a budget for my dividends. My budget for my dividends and my crypto stuff is way better than my budget for my check. But I do set up budgets for those things. And so a good chunk of that is going to pay back the debt. Obviously, we're taking a little bit of that to redistribute to keep the machine going and build up on our positions that we already have. But that's the reason we're doing this. So now we can go into how these are set up. So I actually have these set up in order of importance. First and foremost, we have, and I have them labeled for you here. Let me make sure these are big enough. Bring me down to the bottom, just like we do on crypto portfolio updates, because I'm not the star of the show. This show going to be a little bit more in depth because we can show numbers, because there's not anything that I'm really worried about you guys seeing in here. As far as, this is highly regulated. There's no account numbers or anything like that. But first and foremost, we have the income portfolio, which this is going to be the core that's going to fund everything else. And the goal here is to get $30,000. We're looking to get to $30,000 into this portfolio as quickly as possible. We will be tracking the dividends payouts and looking at the positions in here. Oh, geez, got a little frog in my throat there. I get a sip of water. We are looking for we'll be tracking the dividends so that way you can see, because like there are some of these content creators out here that I've seen on some of these channels that claim to be dividend aficionados. They're trying to be dividend gurus. and they're having like portfolios that are like 2, 3, 4 times my portfolio size, and they're producing less income, and it's kind of weird to me. I don't know. It seems like a lot of the content is geared around just putting stuff out and not. I mean, I don't know. Like, I guess they're testing it with their money, but it's like, yeah, these are dividends for if you like want to retire when you're 60. And we're not trying to retire when we're 60. We're trying to get out of the having to work and having work optional lifestyles. Cause I'm not a FIRE movement advocate. I am an advocate for hard work. I do enjoy working hard. I don't like having to work hard. I don't like having to feel the stress of job insecurity. I don't like those parts of work. Working in and of itself, yes, I need something to do with my day. I understand there's a bunch of people who advocate laying around on a beach. I've seen people who have actually had that lifestyle and they're depressed and generally on drugs. And I don't want to be depressed and on drugs. So I'm pretty sure that we weren't built to lay around all day, every day. So the goal for this portfolio, the target number is we're looking to have the account value at $30,000, which keeping a 10%, because while I am rushing into these positions, you'll see that there's $3,000 in cash currently sitting in there right now. As I've moved the last chunk of our latest debt conversion, we reuse that again because they sent me some more cheap and free money, and we went ahead and capitalized on it because we can use this to pay that back. The latest, but you'll see that so I'm dollar cost averaging. That's the other thing. I don't necessarily just dump all the money in as soon as it gets in there. Like I'll kind of set my targets and I'll have like a higher buy and a lower buy as we go through the week. And if it's sitting and if it's a price that's stable, then it hits one price as we're checking throughout the day. But I'm also just constantly looking for those dips below that number. And if it does, I'm going in on that price with the larger buy. But I'm not dumping the whole bag in. I'm doing this in like $250 to $500 increments throughout the week. And it's just based on where the price is, where my initial buy-in is, and what the market's doing. Fortunately, with the dividend stuff, it's these stocks aren't running. The most volatility is on my primary position, which we'll get into once we dive into this portfolio. But I want to give a breakdown of what all of these portfolios do. Now, the next one is my options account. We are going to be opening up an options account. We will be delving into that from time to time. It will be a little bit delayed because we are going to be doing a review. I have joined the Wall Street Trappers Anonymous. And the reason I did that is because I don't have the time to day trade. And I noticed that Wall Street Trapper does plays with his options the way that I do plays with my crypto and the way that I look at, well, actually, I don't do plays with stocks because I don't believe in trading. But his option plays are very long-ended. So, like, you're not having to sit there and, like, watch it every day and be in there. Like, it's just like you open it up and the window's so large that it's like if you hit, you know well in advance. It's not a rush. It's not like you got to be in there at the minute of looking at your computer all day. I'm not looking to do that. And he seems to trade along the lines of how I trade. But for those of you who are looking for the day trading experience, we have some very talented people in Circa 84, which there is a referral link for down in the description below the video playing right now. If you open that up, there's a bunch of goodies in there for you, a bunch of referrals for a bunch of stuff that I personally use. And I don't have, well, I do have one sponsor, Delta Investment Tracker app. We'll be getting to see some of that because they do track your traditional finance portfolio as well as your crypto portfolio. You can have them all in one house. So as we're looking at that, I look in there and we're going to be tracking those plays. Now, currently, we're doing this, and so this is totally experimental because what I'm gonna do is I'm gonna put 1,500 in here, and we're gonna see if we can get started. So currently, I've been in here. I started it up already because I wanted to be in there. He's normally given us he's actually keeps his word. It's a very active Patreon, and I can't speak highly enough about his dedication to giving great content, great information. That's the beginning. But within the Patreon, once you get behind the paywall, that man's working. And I can't discredit him. We had a little disagreement about the crypto stuff, but like when he's in his bag, he is in his bag. It's very organized. There's a lot of communication coming directly from him. The community they're in, there's a lot of communication on those Patreon posts in between the community members, which is awesome. So far, so good. I'm waiting to get in on my first play. And we currently have 1,200 sitting in there. We're going to get this up to, I'm going to allot myself. Actually, you know what? I might, just being honest, I might allot myself a little bit more or start feeding into the, like, I want to have a base account. No, you know what? We're giving it 1,500 because that was the bare minimum he said to start on one of his videos that I watched because I watched a lot of his videos. So we're going to put another 300 in there. So that way we'll be at 1,500 and we're just waiting for a play that I can afford to get in. Not all of the plays are attainable, which is why he says wait until you have about $1,500. Like I now understand that. The 2 plays so far for the 2 weeks that I've been in there have both been expensive. And then actually he's done 3. And then one of them, all 3 of those plays were out of the price range for if you're sitting with an account that's $1,200, honestly. But I'm waiting to get in on my first play with Trap. I'm really interested in it. We're going to see how this works out because I see a lot of testimonials about what people are getting, but this will not be day of because that is sensitive content for the trappers. So we will probably only be revisiting those plays after we close them out, to be honest. Like I probably we'll get to see this. I might give a little blurb about how it's going, but like we're not going to be looking at the plays in there. We're not going to be doing any of that out of respect for the platform. But I do want to give a real world account from somebody who's got no holds barred base level opinion on if these things work. You know, like it's because like you see the stuff that he puts up there and you see a lot of the testimonials and it's like, hey, like these people are riding Trap's jock because they're in there. And I'm like, well, maybe they're riding the jock because he's getting them results. And also, with being in Trappers Anonymous with specifically Triple Beam team, shout out Triple Beam. He does plays. So like, I'm also like, as I'm dipping my toes in the water, this is something that I can do that's semi-passive. I'm just going to see, we're going to go based on if you are an idiot like me, I am not good at this. You're a dum-dum and you're going, hey, I'm going to join Trappers Anonymous. Is the value there? Like the first thing we're going to be looking at is, can we substantiate this paying for itself? Like that's going to be metric 1. Metric 2 is how well are we growing the account? And I will have a budget for this account because any of the stuff that comes out of here, we're definitely going to have a chunk of it going back into the crypto space. We're going to have a little chunk of it that's going to be allocated for obviously paying the fees for Trappers Anonymous. And I'm probably going to have a little bit shoot back into the income field. Now, with the income field, we have a good chunk of it right now until we pay back the debt service used to get into these positions. And actually, that was the other thing. When we started this off, like part of the influx was we also use the in-home banking money. If you haven't tapped into Future Financial Strategies, you might want to go find those episodes where I do those breakdowns on how I do my in-home banking out of my bank account. Because I don't believe in having cash not work, so I figured out a way to gamify it and have it work. We also use the Cash App play, where we took out the loan and Cash App to get a little bit of cash to get in here. And the Cash App play, those are the Cash App and the in-home banking. Those are really quick paybacks. So Cash App at the end of this month's dividend payout, we should be darn near paid back. We have till June 28th. We're going to pay it back, let it sit for a little bit, especially under the circumstances, because we might be using it for some other things at this point. But we'll be using it for that. And then we also will be going in on the in-home banking, and like that one, as soon as it's paid back, we're probably going to be recycling it back in here. It's just what it is. But the opportunity fund is also predominantly going into this play right now, until we get to $30,000, which is going to be a little bit of it's going to be a little bit of a drag. I mean, we'll see how depending on how the portfolio works. But I mean, portfolio total, we're at 19,340. So if I was working still at a regular clip and I had that guaranteed salary income from me just going to work, I would be able to round this out off of the opportunity fund budget allocation out of my paychecks alone within 10 months. We will see, because we're going to be cycling a little bit back in. We'll see what we've got going. I'm going to probably do an episode where I do these breakdowns as well on what the budgets are for these plays. Actually, we'll do that next month. This is going to be a monthly show. I'm not going to do this every week like Future Financial Strategies. I don't feel like you guys need to hear me talk about the same things over and over again, because even the guys with 10 positions in their portfolio, it's like they're just talking about the same thing over and over again. We can do the breakdown once a month. We can talk about what we're doing. The other thing that I don't do is I'm not going to go in and analyze the trades. When we do the breakdown on the positions here in a second for the income, we'll go into why I picked those positions and my ideology about how these positions are going to work. And we will do, so we'll do that. But then we also have our long-term holds, which is cool. Got $3.16 and $3.16 in cash. We've already taken one dividend. Well, we've taken multiple dividends payouts. Most of them have been reinvested, but we took one that we're actually using to service the debt after the debt was acquired. And part of that budget was sending some money over into the long-term holds. This portfolio is stuff that I'm buying into. There is a trade in there right now as a degen trade that I've got. It's a degen position, which is high speculation, but it's based on my narrative. Other thing. And then last but not least, we have the failure fund. This will be getting liquidated out. As you can see, this portfolio is at a slight loss. It's a little bit down. We had some dividend income going into here. This will be moving into the income portfolio, and then maybe a little bit into the options portfolio. But the bulk of this, the $4,000, is going straight into the income portfolio. We are going to we're just waiting for that transaction to settle from the sale of those stocks. It's a position that was down. It is a core position in all my portfolios, but I figure I'd rather have the bulk of my income coming in, and then I can feed back into this. I'll take a percentage of that back, and we'll start putting a little bit in the failure fund. That is a Roth IRA account. I don't really put money in there because I don't believe in it. So we're gonna start doing a little forced process by taking a little bit out of the things that are producing income and seeding it into the investments, but into the retirement account. But since it's at a loss, I'm gonna go ahead and pull all that out, and I'm pretty sure the taxes on that are gonna work itself out in the wash, because like there wasn't much going on in there to begin with, and there isn't. Like the income that's been generated on it was like 3 months of dividend payouts, and it really wasn't that much. So we're gonna go ahead and move this over and get it active. I want everything locked and loaded in the active account. So that's gonna put us at about like 17,000 in there. So yeah, it's gonna be like 17 and something depending on what else I put in there. But that's where we're at for right now with those. And then last but not least, we have the family funds. Which I have those separated out because these are funds for, starting with my just recently born, it's my cousin's kid just had a baby. And so I'm doing a fund because I'm trying to change the narrative in my family. As you can see, we're doing one stock a month. I've already got the stock that I am picking out for her for this year. pretty soon you will see that, because I'm just going to buy all 12 of them because it's not a high dollar stock. But it's something that I was thinking about. You know, if you've got, like me personally, I don't have kids yet, but like I can make as many of these accounts as I want. And what I'm planning to do is do 1 share a month for that child. And then as they turn probably about 10, I'm going to have them come in and I'm going to teach them how to manage this portfolio. And then they're going to manage it from then. They're not going to be able to pull money out of it, but they'll pick their stocks. They'll make their calls, and after they get the ideology on like how it's going, they'll have 10 years of me buying 1 stock a month, 1 share a month of something that'll go into this pot. And I'm either it's not going to be the same one every year. It'll probably be like 1 year, it'll be something. The next year, it'll be something else. Next year, it'll be something else. It'll be dependent on what I'm into at that point in time. But I've got the stock picked out for this year for sure, because obviously it's going to go with my narrative. So the first year, and then we'll look at, you know, going to birthday parties and stuff, take a note of the stuff that they like, and like, you know, maybe put some of those a year of that stock in there, whatever the kid's into, and we'll have that in the fund as well. Or maybe for the first 10 years, I pick the individual stocks that go in here and they just deal with it. And when they get to manage it, we'll see how I did. But one of the things that I am going to do is I'm going to pull a 1%, charge them a 1% management fee. You know, and like as it's building up, you take a little bit of that, kick it back over to me at some point. I mean, obviously the first year it's not going to be that, but that's the ideology there. It's my way of kind of changing the narrative and actually instilling the value set and the methodology that I think my family should have. I think that there's no reason that a child should be graduating from high school without being financially literate with a skill. And so this will cover both of those bases, because they will be learning how money works directly with their own portfolio. So they're going to get the experience of making money. They're going to get the experience of losing money. And, you know, and then by the time that they graduate, they will graduate knowing how to manage a portfolio, knowing how capital flows, how money works, and whatever environment that they're in when they graduate, they're going to have some tools, and they'll have a set nest egg of a financial foundation that they can go off of. Because if this is set up the way that I'm hoping it'll be set up, then this will be one of those things where it's like, this will by and large likely be generating some income. And, you know, 10 years of just letting something snowball, like even a small amount like that, it should turn into something over a decade. We'll see. So that's what that is. There's probably going to be some more funds that go in there. I don't know what I'm going to do as a cap for that. I might do, probably say I'm good for at least 2 at this juncture, and maybe 3. We'll see. But yeah, so so the failure fund, obviously this is going to be 0 by the next time you guys see it. And it will be over here, and we will be hopefully collecting some pretty decent dividend income to challenge some of the gurus that are out in this space. I want to give a shout out, though, to, as well, obviously, along with Wall Street Trapper. Let's see here what we got. Okay, yeah, there we go. So, as you can see, I want to give a shout out to Entrepreneur Investor, because one of the positions that I'm jumped into headlong came from him. And, you know, we're going to talk about the position. So this guy, I don't know how to get rid of it. It won't let me make it go away. But this is from the original portfolio. There was a point in time where I was buying penny stocks. Again, didn't know what I was doing. Didn't know what I didn't know. And I put a little bit of money into this position to get 1 share of this random penny stock. And it was, I guess it was like $13.85. I bought that much of it, but it was a penny stock, so I had a bunch of them. And it went to 0, and now I don't know how to make it go away. Because, like, I can't sell it because it's gone. Like, the company doesn't exist anymore. And it just sits there to remind me that I sucked at one point in time. And I'm not I wasn't gonna, I thought maybe make another portfolio and move this over, but I kind of like this reminder of like me not knowing what the hell I was doing. So we'll look. So the primary position, we're going to go ahead and do the breakdown in here. Now, as you can see, we're down. So we've been dollar cost averaging down because we're down from where my cost basis was. As you can see, the cost basis on this one, so this is post market, it's $50.29. I was buying in, hold on, I can actually look that up. When I was buying, because for some reason the app gives you a better breakdown of this than what the website gives. I mean, it gives you more information, but like, let's see here. Not now. Go into here. Gain loss. So yeah, so my average buy-in price at this juncture is $53.02, and I started buying at probably about, I think it was like $55. And the reason I did that was like I got into this account as soon as it came out, and the reason I got into this position, because the other thing is this also doesn't factor in the dividends that I've gotten from it. I don't think. Yeah, it does not do that. But the dividends I've made more off dividends than what I'm down currently. So there's also that, but like I don't worry about the stock price as much as the income per se. And so what this is the Round Hill Bitcoin covered call ETF. What they're doing is this is an income generation play. They're putting in calls, option plays, kind of like what I'm going to be doing in my option portfolio with Wall Street Trapper, following his option calls. But they do covered call ETFs on the Bitcoin ETFs that have been released. And a covered call, for those of you who don't know or not familiar, is basically, in short, it's a bet that the price is going up. And so you pick a price. If the price goes past that price, then your call now has money ascribed to it. And if you sell that contract off to somebody who wants to buy those shares, 100 of those shares at that price, you make the premium. And what this ETF does is they pay the premium back to the holders, which is cool. So I didn't need Bitcoin in my personal portfolio because I am a Bitcoin holder. So it didn't make sense for me. So when the Bitcoin ETFs came out, I bought in the initial onset as support, but then I sold them off because I was like, this doesn't make sense. I don't need this. I have Bitcoin. I can buy Bitcoin. I can store Bitcoin myself. I don't want a middleman in between me and my Bitcoin. So once I saw this product release, and other companies are starting to do it now, but the Round Hill Bitcoin covered call ETF was the first one. Just going to throw that out there. And this obviously is 71% of this account because I invest solely in the first position. So my goal is $10,000 in these positions. The core of my fund is going to have $10,000, and I'll unveil those as we get to them. And then I waterfall them down. Like I manually, as you can see, reinvest. No, I manually reinvest my dividends, obviously, because I'm pulling a little bit out of the account to pay back the debt that was used to get these positions. But I manually reinvest. And so once this hits $10,000, this position specifically will move on full bore to the next position. And I already have enough in here to where I'm going to be over this position. I'm going to be over 10,000. So I've got basically one more dollar DCA. So like tomorrow, this position will basically be, as far as post market's concerned, $10,000. And then I will just reinvest a chunk of this back in until I hit the dividend goal for it, because I don't think that that's going to be necessarily the dividend goal or the dividend that I'm looking at of what I need this to produce for me for this account. So then the next one is QDTE, and this is not giving the accurate thing for that. Let's open this in a different tab. Let's see here. I'm gonna pull this up. Hold on. QD. Hold on. Gosh. DTE. We're running live. That's the reason these are actually I hot shot. Oh, that is a round hill one. Okay, so this is a round hill N100 ODTE covered call strategy. The ETF uses 0 days to expiry ODT options on the NASDAQ 100. QDTE seeks to provide overnight exposure to the NASDAQ 100 and generate income each morning by selling out of the money ODT or zero DTE calls on the index. So this actually generates money overnight. Now, the distribution yield on this is 30.77%. So this falls into that high yield category. And the reason I chose this one is because it pays weekly. It was something interesting. I saw, did a little bit of research on it. It's something that fits my strategy. And what you're going to notice is my core positions. And once we roll out the third one, you guys will find out about that. I'm not going to spill the beans until we get there. But once we get to 10,000 here, we're going to get a good grip towards 10,000 here, and then we'll have the other portfolio position opening up as well. This position specifically is making plays in the after hours overnight market, which is awesome. But it pays weekly, and that was the thing that got me with this, was some weekly income to get into my portfolio. Obviously, we'll be making the plays monthly, as far as reshuffling and redistributing these dividends, but this will put some cash into the account weekly. That, little bit of a trickle in. I like it. I do like it. So that's the reason we went with this play. And you'll notice that these core positions, the similarity between all of them is they are active. They're active. Like I want, for me personally, I'm coming from the crypto space. So my ability to tolerate and deal with volatility is a little bit higher than most people, because the volatility that we have in here, like being down 4% on the position, obviously I'm not buying these looking for maximum growth. I'm buying these positions for the income. But like also when the numbers change or go down a little bit, like it doesn't concern me as much, because 4% in comparison to what's going on in crypto right now is nothing. So I can just sit here. These are kind of set and forget. These people are active in the market. They're actively making plays and positions, and you can track those. There's a bunch of people who go in there and they have a whole lot to say about the covered call positions. And I'm just like, what's your option portfolio look like? Are you doing better than this? Because also, you don't have to do anything. Like, I'm letting these people work. Like, I have the fund managers of these funds. They're placing their calls. They're making the informed decision, and they're kind of doing the work for me. It's passive. Not as passive as following the plays over in Trappers Anonymous, but because I have to make those options plays myself. But pretty passive, and it's about income generation, which is the reason for this portfolio. This portfolio, and I understand a lot of people are going to be like, oh, you could have bought stocks with that, and I'm like, I have Bitcoin. Like, no, like it doesn't matter to me. Like, I need the income. The reason I'm setting these up at the core of why I'm doing this is so that I don't have to touch my cryptocurrency next to ever. Like, I'd like this to just consistently pay, and then I just worry about dealing out of this, and then my crypto portfolio can just build up and build up and build up and build up and do that. Like, I hold Bitcoin. I'm not worried about anything that any stocks are doing, because none of them have come anywhere close to the performance. So I'm like, I would rather use this to fuel my stock positions while I'm not needing to live off the income. And actually, this is going to fuel that period, because I have that also built into this. Is the investments are part of my daily expenses of what we're looking to get this out as like a cut to the quick bare minimum, my core expenses, the stuff that I need to exist, and a little bit of the stuff that I need to exist in a state where I'm happy. Because as long as I can go outside, do the things I want to do, buy some toys every once in a while, I'm good. So I factored this, what I'm looking for based on the lifestyle that I currently have. And I'd say that that's the bare minimum of what it is, because I enjoy my lifestyle that I currently have, injury aside. So we're building this portfolio to shield the crypto, but I also want to build a real portfolio. And this is, I think that starting with a core of income actually is more beneficial, because I wouldn't want to have to eat off my stocks anyway. Like I really wouldn't want to have to do that. That doesn't sound like an efficient way. And I understand people are like, oh, you build the portfolio up and live off 4% of it. Da, da, da. And it's like, yeah, every time you sell that off, that's like you're paying taxes. So you might as well just have some steady income and just pay the taxes on that, because that's also low tax. Then going about your day and having to chunk down your portfolio and hoping that like you don't chunk down and then there's a dip or have to take a payment or distribution out during a dip. Like I would rather just have less income coming in and not necessarily have to go to those depths. But the reason I'm doing the income first is because the income can fuel everything else. I'm replicating what I did in the cryptocurrency space, which was figure out a way to generate income within the ecosystem, use the income to continue to purchase into the ecosystem. It worked exceedingly well. And I'm assuming that math is math everywhere. So it should be the same over here, considering we have products where people are out there literally seeking to get income. Side note, my QDTE holdings are up a little bit, which is nice. There's some green in my portfolio. The reason the Bitcoin covered call ETF is down is because Bitcoin's down. So my portfolio is heavily tied to the crypto space, considering my first selection of income generating position. But this was a very informed decision, because I am in the crypto space and I know what Bitcoin's getting ready to do within the next 16 to 24 months. And this play, I think, is going to generate some income on a grand scale. So that's the bet that I'm placing. It's something that I think that position is going to generate so much income, in fact, that it's going to pay for a lot of stuff within the portfolio. So that's the reason we did that. But right now we've got our current cash value. And so considering that the core of this portfolio is every phase of this, and phase one is getting the core holdings. Once we get to the core, then I'm actually going to have to get to a point to where I have $3,000, because I want to keep my portfolio. I want to keep 10% held back for opportunity. So after we get to $30,000, we're going to have to get $3,000 again as the baseline for the portfolio, just for opportunities. There's a flash crash, something goes on, just anything could come up. But we're going to have to, each of my portfolios, the goal is to keep 10% in cash holdings. I learned that from Wall Street Trapper. And I'm going to apply it to my traditional finance portfolios after I get this initial $30,000 in here. Because, you know, he knows his space. I've actually applied a little bit of that philosophy to my crypto portfolio by keeping a 5% cash reserve. But we had the dip. We blew through the cash reserve because there's so many opportunities. So we're hoping we're going to have to reapply that once we get back to bull running, because I believe it's coming. I believe we're going to have some interesting things. And I think that this decision to use the Roundhill Bitcoin covered call ETF is going to play out in my favor, because it's part of my narrative. So that's what we've got for today's episode. We're jumping down in here, rounding it out. We got 45 minutes. These are going to be good. So remember, guys, this is going to be a monthly, but definitely want to urge you all to tap in for the monthly episode. Tap in with me down in the comments and let me know what you guys think in regards to if this will be something of value. Is this something that you guys are interested in hearing Reckless Ray Dinero speak on? Because my ideology, I'm very strategic, and while there's just under $20,000 collectively in this in my brokerage right now, you're seeing me build it out, because the end goal with the way that I have these set out in phases for my positioning in this income portfolio, the goal is the income portfolio is going to have $48,000 in it, and then that's going to feed into everything else. So we're a little under halfway there, but you'll get to catch it. I mean, this came in rapid succession because like we just hit it with basically $7,000 from the debt conversion that we just did, plus, well, actually it's like $8,500 including the in-home banking debt conversion and using those funds and the Cash App Play funds. So basically 8,000 of this, or 8,500 of this came in rapid succession that we do every 10 to 12 months. We get to do a cash infusion of that nature that's specifically targeted towards building wealth. Now I got to stop hurting myself, so that way we can continue that trajectory without having it hindered. But yeah, that's where we're at. It's your boy Reckless Ray Dinero, and until the next time, peace.